Venugopal Garre, Managing Director, Bernstein. He joins us for a change live in our Mumbai studio. So thank you very much. Nice to have you in our studio. What brings you to India? Just routine visit or big block deals you're working on?
I just wanted to see why there is so much excitement. So routine visit, a lot of meetings, trying to understand also how the domestic mutual funds are looking at this sort of.
Did you see the new bridges in Mumbai?
Oh yeah, I did.
The metro construction?
I did. So
the airport has got a new look.
Exactly. So I mean,
so
every time
there is excitement.
Exactly. So every time I come, it takes much longer to reach places. But the reality is, you can clearly see the very few countries in the world where you have so much of activity, especially cities like Mumbai. But I guess it's a 5-10 year challenge for those who live in the city. But the reality is, after that, you're going to benefit from that. So that's the reality.
You know, while we may say, okay, India is in a pedestal positioning, and we are a special situation market, but the reality is Nasdaq is at an all-time high. Japan has cut out loose after 20 years of a bear market. European markets are also doing well for themselves. While absolute gain may not be that large, but equities in general have done well. So how much of the excitement in India is actually global in nature?
No, I think I would keep India aside from Japan and US particularly. See, firstly, those two are developed markets. If you look at the last 10 years of the entire construct of developed versus emerging markets, developed markets have actually done really well relative to emerging markets. So as an asset class, emerging markets' potential for returns has been questioned, and that's the reason why there's been a lot of redemptions as well globally, which is the reason you don't really see too much of FII flows as well. And the second aspect is, if you look at the US particularly, we have seen a situation where there's a pretty large concentration of returns, for some stocks. But if you look at India, this is a very rare situation where you have pretty much broad-based returns. They might be just isolated few stocks, they may not have worked, in the amongst the top companies. One characteristic representation is, we were doing this report this week, I think we released on Monday, where we looked at the last decade of the 150 mid-cap stocks to see where the valuation bands lie. And we were actually surprised that about half of them actually traded 40 XP, and 25% was about 60 XP, and this is the highest we have seen, actually even higher than GFC times. Okay. So that is the difference between India and the other countries, I would probably say.
Valuations.
But are India valuations a concern?
Definitely a concern. I mean, remember that valuations tend to be a concern, not always. They tend to be a concern when you tend to see momentum peak off, which is earnings momentum, and when you don't really see further earnings revisions. Alongside this valuation thing, if you see the number of stocks seeing earnings downgrades is higher than the number of stocks actually seeing earnings upgrades. Yes, we're still seeing some earnings upgrades, but the ratio is probably 40-60 now, with 60% seeing downgrades. And economic momentum is very good in India. There's a cycle brewing for sure, but remember that economic momentum is also moderating. You clearly see from the GVA data that came out, right? So that's not a bad data, but the reality is it is moderating, right? So that is not, the markets are basically not reflecting those realities at this juncture.
So in light of that, did the move in PSUs, what we witnessed last year, surprise you?
No, I don't think that was a surprise, because I was an outright buy on the market last year, right? So for me, it wasn't really about, a narrow focus on a particular sector or a particular category of market cap. We were pretty much an outright buy. Now the question simply is that PSUs in general, if you were to think about it, were very cheap on valuations, and in fact they are still cheaper than probably their private sector peers. The second aspect of PSUs has been that they are linked to the economy. There is no IT services PSU, there is no consumer PSU. So what is happening in the economy is basically you are seeing a lot of the real world, which is basically capex linked or things around that, primarily recovering. And so what you're actually seeing is also earnings construct of recovery, but I would just caution that don't call it as a structural change in how to approach PSUs. Nothing will change. It doesn't change in the world. Forget about India. Once your cycle is done and dusted with, then you will realize that, hey, you know what? We need to still focus on companies which can manage their own fortunes. That's the reason why people don't really invest in SOEs for the long term. These are good trades